Greetings, welcome to the October 2023 edition of the Fraser Valley Pre-Sale Pulse, bringing you the latest real estate intelligence on the Valley's pre-sale and resale marketplace over the past 30 days. I'm Susanna Gonsalves.
And I'm Brittany Reimer. And as the leaves begin to change color and the temperatures drop, Suze, I think it's safe to say we've entered into the fall season and the fall market. Now, many pre-sale projects have been waiting for fall to come to market and capture some motivated buyers looking to secure a home before the end of the year. But overall, there is still a lack of supply entering into the marketplace. So let's jump right into what's happening over the last month and what's to come for this month ahead.
September was a big month for Greater Vancouver, with multiple Metro Town sites hosting realtor events and private previews, and West Coquitlam projects gearing for launch. Now, it's anticipated that many of these projects will begin contract writing sometime in October. It appears that the Fraser Valley, while not boasting quite as many projects or events, is closely following the Greater Vancouver in terms of activity and projects getting ready to launch.
That's absolutely right, Suze. It seems many projects in the Fraser Valley are getting off the sidelines and starting their launch this fall. So for example, we're seeing SkyLiving in Surrey previewing now, really to gauge some interest in the market, and the third building at Highstreet Village in Abbotsford begin their VIP preview appointments at the end of September.
While developers have shown caution in launching their projects, buyers too are adopting a wait-and-see approach. While eagerly waiting the next interest rate announcements at the end of October, buyers are still cautious and apprehensive that another rate hike is likely on the horizon, despite any confidence that was gained when rates remained unchanged in September.
Yeah, I absolutely agree. There is a strong focus on inflation at the moment, as we've been consistently talking about, and it plays a very pivotal role in predicting whether the Bank of Canada will maintain or raise interest rates. With another inflation rate announcement scheduled before the Bank of Canada's interest rate decision, it's a bit of a suspenseful wait and see right now as to what that actual outcome will be.
Now, I've got my popcorn handy, right? It's hard to believe that another rate hike won't dull sales absorptions and keep some projects on the sidelines, not wanting to risk launching in this highly uncertain time with the high construction costs as well.
I have so many questions about what kind of popcorn flavor you like, but we can get to that another time. Oh yeah, okay. I love those flavors. Now, it appears the market uncertainty still lingers, and it will be interesting to really see how potential, buyers respond to the upcoming launches that are essentially testing the waters this fall. And with that being said, Suze, let's jump right into those projects that are coming to the Fraser Valley this fall.
So, all right, let's begin by talking about one of the few projects that are anticipated to launch soon, and that is the Commons by Zenterra.
Yeah, excited to chat about this one. Now, they're bringing a total of 199 homes. The Commons will consist of two separate buildings launched over two phases. Their first phase will consist of Building A, which is made up of 69 homes ranging from studios all the way up to 3 bedrooms between 467 square feet to 967 square feet. Now, a trend we're starting to notice with wood frame developments in the Fraser Valley is an increased allocation to amenity space. We saw this with Hartley, Unity, and Pura, and we're now seeing this with the Commons as well, as they're allocating actually 6,000 square feet of space to amenity offering.
Yeah, absolutely. It seems that an amenity-rich building is no longer something that is specific to concrete builds now, as developers are realizing how important they are in purchasing decisions.
Yeah. And around 25% of the unit mix for Building A for the Commons is dedicated for their 3-bedroom homes. This is also quite interesting, as we know that those larger homes are usually the most difficult when it comes to absorption, but we also know that there's a significant lack of inventory there too.
Yeah, to give you an idea of how significant 25% is, I think we have to speak about the unit mix of previously launched projects in the Fraser Valley, particularly in Langley. Vera, Unity, Kensington Gate, which all launched this year, did not offer any 3 bedrooms, while Latimer South Village condos allocated around 6% to 3 bedrooms.
Yeah, and that's a huge gap. I suspect in a way the Commons could potentially, be, as I mentioned, filling that 3-bedroom gap in the market. We won't know, of course, until sales commence, and we'll keep a close eye on what product types are actually being absorbed.
Great, and those 3-bedroom homes will eventually sell, but we know they typically are not the first to go, so in a pre-sale environment. So now, speaking of sales beginning, Unison by Martise Group is located right next to the Commons and is set to launch this fall as well.
Yeah, that's right. A similar offering of studios, 3 bedrooms ranging from 464 to 1,043 square feet. They will likely be offering a comparable product, and it will be quite interesting to see how these two projects strategize as their timing of the launches is actually quite on par. We've got some exciting insider intel as well with respect to the Zenterra program. They're gearing up to host a realtor event. Actually, they hosted it last night. Now, homebuyers can expect a $10,000 off with just a 10% deposit. Plus, they're looking to add a personal touch. There's an additional 10% decorating allowance available with a 15% deposit, excluding their studios. Now, air conditioning is on the house for all homes except studios. I mean, hottest topic in the boardrooms right now, air conditioning. Now, to top that off, there's a flat fee assignment of $1,500. Realtors also have a bonus. Homes priced over $700,000 have a $5K bonus, and the commission structure is 3.2 to 1.15. So interesting. It's been a while since we've seen like incentives in this marketplace as well.
Yeah, and interestingly, they're clearly going after a very investor studio buyer there by pulling out the air conditioning and changing the deposit structure. It's an interesting approach for sure. Then let's move on to our next project feature, Spring Hill by Urban Coast Developments. Spring Hill actually had a really quiet launch back in the beginning of September. There hasn't been a lot of advertising or noise to go with this one, and sales are being done out of the agent's office.
Yeah, Spring Hill is a wood frame condo building, 113 homes ranging from 1 bedroom to 2 beds in the city of Langley.
Yeah, something I've noticed with Spring Hill is that their 1-bed and flexes are quite large. Almost all of them are over 700 square feet, which is the same size as a lot of junior 2-beds in the market, or at least the one and dens at other comparable developments. Now, with over 50% of their unit mix allocated to these 1-bed and flexes, it's very possible that they could struggle with sales absorptions on these, given the higher end price point that will come with the larger size.
Yeah, absolutely. Especially with their primary demographics so far being investor and young families. Both of these groups will likely value smaller junior 2-bedrooms over larger 1-bedroom and flexes. And if you're a development partner of ours, you would have received our Langley market report likely recently. And we actually featured specifically, that 1-bedroom and den and 2-bedroom and how to retrofit that space to be more saleable. So
now, having said that, Spring Hill has recorded about 25 sales out of their 113. So they're off to the races.
All right, now time to move on to our resale stats. Even as we transition to fall, we're continuing to see a decline in sales activity. September is now being marked as the 3rd month in a row where we're seeing decreased numbers. Now, 1,100 sales in September, we're seeing an approximate 14% decrease from activity that was seen in August. Although up 23% compared to this time last year, we're still looking at sales levels that are lower than the 10-year seasonal average.
Yeah, with talks of another potential interest rate hike, it's not surprising that we're seeing sales decline as many purchasers sit on the sidelines waiting patiently for what happens next before they make their next move, or are just stuck in their current home on an old rate or payment.
Yeah, absolutely. Now, while most of us would agree that we don't want to see another interest rate hike, what it has managed to do is slowly push us away from a seller's market and back into a more balanced market territory.
Right, especially when you combine the decrease in sales activity with an increase of new inventory that's being added to already growing inventory.
Yeah. Now, we saw approximately 2,900 new listings and 6,500 total listings in the month of September. This marks a 9% and 4% increase, respectively, compared to the previous month. These increasing numbers also mean that we're now only 3.5% from the 10-year average when it comes to inventory.
And I think that's becoming evident when we take a look at the sales to listing ratios for September, which is currently sitting at about 17%, definitely indicating that we have now moved into a balanced market.
Yeah, and I agree. It's worth mentioning as well that detached homes played a big part in the lower ratio. Demand for townhomes and condos remain relatively high. It's at 31% and 25% respectively.
Yeah, that's a good flag, Britt. Either way, it does seem homes were sitting for an average of 25 days on the market before seeing any movement in September. This number was lower in August at just 20 days, which once again signals that the market is slowly shifting in favor of buyers, allowing them more time to think over any potential purchases.
Well, speaking of shifting in favor of buyers, how are those prices looking, Suze?
Yeah, prices have decreased, but not to the extent that sales activity has. The benchmark price for all product types in the Fraser Valley for September was about $1,029,000, which is a 0.8% decrease from August, but still 2.1% higher than September of last year. Overall, relatively flat so far, but that could change.
Yeah, and I mean, we know prices will almost always be the last element to shift. My guess is the market would have to stay in this gradual decline here for at least another few months before we actually start to see any significant, downward pressure on pricing.
Yeah, I agree with you there, Britt. These next few months might lend itself well for anybody looking to enter the market. Well, Britt, I believe that wraps us up on another edition of the Fraser Valley Pre-Sale Pulse. Don't forget to subscribe to our channel and Newswire, our daily email newsletter providing you with the latest real estate news. We want to stay informed and real estate intelligent.
Thank you for joining us in this beautiful O2 Sales Gallery. I gotta say, this wellness-inspired gallery is giving me those spa vibes. There's water filtration, air purification system, steam showers, fitness amenities, yoga rooms, and infrared salt sauna.
Yeah, thanks for the plug there. The amenities have definitely been a big draw for buyers here at O2. Along with beautiful finishing, buyers have told us that every home feels like a penthouse, so come check us out if you haven't already. In the meantime, we'll see you for November's edition of the Pre-Sale Pulse.